Hello, guys, and welcome to this weekly and monthly volatility 75 analysis. I'm going to share some gems here. If you get it, you get it. If you don't get it, forget about it. Okay? Okay, quickly. Here we go. Listen to what I'm going to explain to you. I'm going to briefly explain the nature of volatility 75, right? Volatility 75 is majorly traded with the derivative broker. So go check it out if you're new to all this. And I'm going to explain something to you quickly, right? Volatility 75 moves in channels in the weekly time frame and in the daily time frame. Moves in channels. So over a period of, let's say, 8 months to 1 year, you will notice that it is moving in channels. If you don't understand that, you're going to lose a lot of money. But if you understand it, you can take advantage of it and be able to leverage on your account and make a lot of money. Okay, so quickly, we're on a weekly time frame now. Now we're going to go to a daily time frame. Notice everything that is happening since March, not even March, started here, started somewhere around January, right here, started somewhere around January, right here. There's been a channel. All right, now what this did, this right here gave us a borderline, between where it's trying to create the range where we'll be ranging for the entire year. So this is literally January right here up till December, no, not December, up to October right here. So what that means is that we can take advantage of this range that is giving us now. This is where the first range was confirmed in April, right? It confirmed the range here, and some people will call it the sell liquidities, and here there is, you can establish the buy liquidity and the sell liquidity. Now if you notice some of the places, there's a fair gap value here. Notice it, there's a fair gap value here that has been utilized and that has been sustained all throughout the entire year. It has been sustained since the fair gap value was established around March, and from March till October ending, it has been following that range. This is very important for you to know the realms and the range of the market, so that you'll be able to leverage on that knowledge and on that information. So it's important. So another gem I'm going to drop to you is that every November of every year, most markets change their patterns. Hear what I have to say. Every November of every year, the markets change their patterns, and you have to monitor those patterns, then follow the confirmation of that pattern in January. I will show you something. This is November last year, right? November last year started giving the last sell liquidity. You can see it right here. There's a sell liquidity. He created it into December and went all the way, and it was all going down throughout December. Then in the first week of January, notice it created the first the first range. That range used the fair gap value and went down to create the buy liquidity right here. This buy liquidity now confirmed a long range sell liquidity right here with a confirmation of a structure. Are you getting it? There is a structure right here, and that structure was confirmed on a daily. Now, when a structure is confirmed on a daily candle, there is nothing you can do about it on V75. It goes. So you notice it did. It confirmed right there. You just notice that there were just a few sell liquidity that were created here, and it continued in that range the entire year. Before I come explain what will happen next here, I will explain what happened previously. I will explain what happened previously. All right, cool. Let's go to 2020. You'll notice something happened in 2020. All right. The same thing, exactly what happened in 2023 was what happened in 2020. So, and it started in January 2020. Look at it. Here you go. Now, this looks like what will happen next year, because we have already broken a major structure this October, and I'm going to explain it to you much later. But now in this region here, this is exactly what it looks like that will happen next year, and this will happen the entirety of from January up till July, and continue till October, and continued till November up till January, where it created another range. All right, so you see, it's all just ranging on either bigger time frame or smaller time frame. So if you understand just very few of those patterns, you're going to just only focusing on the volatility 75, you're going to make a lot of money. You'll be able to leverage a lot. So let me take you to what I was explaining. So 2020 might repeat itself right here. So watch. There is a range here that is created here, right here, that can be created by this structure right here, by this buy sell liquidity meeting up right here. So the market might take advantage of this range right here next year. They might take advantage of it. This might be the playground for next year, right? I am saying that to say this. The market just broke the structure, the channel, the consolidation channel. It looks like a consolidation channel in a bigger time frame, like a daily or a weekly time frame, but on a smaller time frame, let's say in 15 minutes, 1 hour or 4 hours, it's a major market that's been going on and off entirely. So notice this. This is what we're looking for, right? We're looking for a bullish engulfing candle here. So here, right here, if this is going to close at the end of the day, when this is going to close at the end of the day, here is a major continuation pattern being created right here. All right, this is supposed to create a fair gap value, but it wasn't a fair gap value, it was covered. All right, so this is a major region. This is another major region right here. And on a weekly, it is a huge. Let me show you the weekly. On the weekly is a huge rejection candle, but a bullish rejection candle. So this is week one rejection candle, week two continuation candle, week three a bullish rejection, a huge bullish rejection candle, and it's creating another bullish rejection candle. So those 2 points that are created, there are 3 points where the market is going to reject and continue for the next week. It will either reject here, and or reject here, and then continue. So I'm going to make them. Let's go. I'm going to show here. Here we go. This can overlap. I'll show you something now. So we're going to label it. This is A. This is point A. Let's go. Then point B. Then C and D. So when we have all these points, then we are good. Then now we are trading with lots of knowledge, with precision. When it meets all our terms and conditions, then we take our trades. So you don't just come into the market and just think it's just a random game. No, you must think like the algorithm. Yeah, you must think like the algorithm. The algorithm has been programmed to think in a particular way, and the only way we can consistently be profitable is for us to think like the algorithm. So here are our various points of rejection that we are anticipating before we have a long-term movement on the bullish side. So here we go. I would advise you can check out this analysis, and you can also break it down maybe on a 4 hour, on a 1 hour before taking your trade on the 15 minutes, on the 30 minutes. Ensure you do that, and I will see you in another analysis next week, just to expound more on what I explained this week. See ya and bye.